The biggest mistake I see most traders make, okay, is when they are in a position, they do not know when to close out that position. So many people, I think because fear steps in and they also have a little bit of greed in them as well, they are into a trade. They try to weather the storm with hopes. Let's say you're looking to take a trade going long. The market comes back against you. You should already have an idea, an area where to close that position if it starts to come against you. Why sit into a bad trade? All right. Not every trade is going to work out, but you have to know when to close or get out of that trade so that you are able to live to see another trade. Would you rather go ahead and close your position to preserve your capital or wait for the market to take everything against you? Okay. You have to think wise. Number one rule is to know that the market is going to do what it wants to do, okay? Whether it's you get into a high probability setup, not all trades work. People get so frustrated time and time again because they are falling behind or start to learn a strategy and think that it should work 100%. Nothing works 100%. We can increase the probability of areas or zones in which we trade from with, certain techniques, okay? Or methods of trading, all right? I trade supply and demand, all right? And I trade, basically looking for areas of aggressive selling, but I like to trade, say for example, in the direction, whatever is going on the higher time frame, all right? So it makes sense to look for key areas where there's aggressive buying or aggressive selling and waiting patiently for the market to retrace back to that zone. The strategy and how I trade, I have posted it all over the channel in so many videos. So if you want to educate yourself, I'm going to simply say this. Get your pen, get your pad, take notes, rewatch the videos. The information is there. We have successful traders that are part of our community. When I say that, I mean part of the Discord community that have been making money, that have been passing the prop firms, that have been trading with their own personal funds or funded their own personal accounts. They are making money because they spent the time to watch the videos. And lots of them are part of what they are elite members. Okay, you may be saying, well, what's that? Is that going to cost me an extremely amount of money or very costly? No, I simply just created that for those individuals that want to gain additional access to private videos in a sense. Because, I'm a content creator and I'm putting all this information out here for free. You can basically just watch all the videos on the channel if you want to and basically educate yourself. People have done that. But those that want to gain the backdoor access to additional content like the trade breakdowns, that's where I go into depth about my trades, okay? And as if you're sitting next to me, okay? I'm going to say that right now. I walk you through my mindset of, what I was looking for, gearing up to take a trade, why I took that trade, stop loss placement, profit target areas, so you can grasp an understanding. Okay, he trades supply and demand, but I want to see, what is he looking for? Why is he taking certain trades? I walk you through that. So if you want to become an elite member, because people, they send me messages all the time, and all they have to do is scroll down to the lower portion of any video on the channel. Under the description portion of the video, you'll see two links. You'll see one for the Discord. The Discord is free, and then you'll see one that says become an elite member. The elite membership is just $6.99 a month. That's all it is, okay? For a very minimal fee, you can gain additional access to the trade breakdowns and the playlist of videos where I've hand selected, which I believe there are great videos that cover most of, or if not all of the most valuable parts of the content surrounding the strategy and how I trade. So if you want to join and become an elite member, because people always ask, scroll down to the bottom portion where you see the description portion of the video. You'll see a link that says become an elite member, or you can click on the join button right in front of you. You'll see two tiers pop up. Make sure you choose the one that says elite channel supporter for $6.99, and that's going to give you access to the trade breakdowns and the video playlist. Now let's move on. So yes, the mistake that I see most traders making is they do not know when to get out of the trade quick enough. Okay, why wait for the market to come back and tap you out at your stop loss when you can get out of the trade sooner to preserve a little bit more of your capital versus the market taking once it stops you out, okay? And I'm going to show you just an example of a trade that I took going long where I picked up 20 points today. I posted that over on the Discord community, but I'm going to show you a technique, and I've shown this before, of the area in which I would have gotten out of the trade, or at least where to place your stop at, so that you're not putting yourself into lows or a major drawdown. Okay, so take a look here. what you see is the market moving higher, correct, right? And it broke structure when it came up and broke above 457.5. You see that? And it kept making higher highs and higher lows. Now, the market came down eventually into today's session, all right, and into the overnight hours, making lower lows and lower highs. And it broke this area of structure below at 323.5. Once it did that, if you take a closer look and you really kind of bring things in, all right, scale it in on your chart, you'll notice that there was a beautiful area of aggressive buying. What is that? When we're talking about supply and demand, this is demand. This is where loads of buying took place. Yes, and it is not us as retail traders that are making this move. It is the banks and the institutions. When the market gets back to this zone, I am very interested. One, because there's a gap back at the zone, and the gap means that it's an untested area. The market didn't immediately, when it broke up, pushed up right here, and it didn't immediately come back to the zone or to the area of demand. I talk about the gaps. I talk about the untested zones across the channel. Please spend the time to watch the videos. I'm not going to go over every little thing in detail, in this video here, because I've done that just about, consistently, constantly, over and over here on the channel. It's because I want to see people become successful. I want to see them become profitable. And this is the reason why I put out so much free content. Okay. So the market comes back to this demand zone, and this was a trade that I took today. Now, I don't take it just off of my higher base chart. I want to get into a trade at more of a precise entry point so that I'm not incurring much drawdown. Okay. I see people that take trades off of higher base charts. And they may have to weather the storm, They get into a trade, it comes back against them, and they're into a couple $100 drawdown, possibly a couple $1,000, depending on how many contracts you have riding. This is the reason why I move down once the market taps into a higher time frame or higher base chart zone. I move down to my lower time frame because I'm able to get into a more precise entry point. Okay, I'm going to show you how I do this, as well as show you where I place my stop at, so that you don't run into this big mistake of allowing the market to run past your stop and you don't get out of a trade, or knowing at least where to get out of the trade so you don't take on much drawdown. So the market comes back, it taps this area of demand right here. Why is this an area of demand right here? Because we broke structure right here at 379.5. Once it did that, it comes back down. It's tapping into areas of resistance right here, but it doesn't tap into the area of demand. It pushes back up, and then it eventually comes down. So this right here was a setup that took place around 10:25, 10:20 yesterday, where we got the structure break above here. It comes back, pushes higher, breaks structure above this area, and then it took it, until today around basically almost 12 hours before it came back to this zone here. All right, but you got to wait patiently as a trader to see these things unfold. When the market gets there, all I'm doing now is just moving down to my lower time frame chart to look for that beautiful setup, that beautiful part of the strategy that I like to see unfold, and that is a break of structure with a creation of an area of demand, and then I'm going to show you where to place your stop at. Okay, so let's move down to the lower time frame. This is that zone right here. This is that area, that red line. Okay, notates that area of demand off of the higher base chart. When the market gets back to this area, again, like I said, I look for a structural break. Okay, a break of structure. I pull back to a key area of demand now on my 12 range entry chart. Take a look. The market taps into the zone. Okay, pushes low, make a low right here. Push ups, pulls back, push up, pull back, boom, broke structure to the upside here. This is the area of demand resting right here at 11.5. We were 2 ticks away from tapping that zone. 2 ticks, I've talked about this in so many videos. 2 ticks is nothing. Okay, they do this to really fake traders out, say, and you wait, and they want you to wait a little bit more patiently. Well, if take a look here, if you waited, you'll see the market never came back 100% and tapped into that zone. Will it do so? It may. Let's see if it did it so far. I don't know if it did. Okay, so it comes back down here to this zone right here. Oh, no, not even yet, Net. Not even quite yet. We haven't even gotten to that area. Oh, actually, let's see if it did. I'm sorry. Let's go back up here because this is just now happening around 11:30. So I took my eye off of it. I'm trying to see if we got down there. No, we still haven't done so. So not 100% to the tick. But when I see things, to me, I'm counting this right here. When it comes back within a tick or two of the zone, okay, right here, this zone right here, let's mark it up. I'm going to show you. Right here, this is the zone. Okay, right here, 1 or 2 ticks away, I'm going to count that. I'm going to get to the trade if I see the rejection. Now, the rejection means I must see what? A break and close of a candle above to get in. So it comes back to the zone. And the beautiful thing about this that I like here too, that is that when it got close to the zone, it moved away from it pretty quick. And then we got the break here above at 317 and a quarter, 317 and a half, and then we can go long. Our aim is going to be, for me, I notice this beautiful area of supply resting right here. So, but I got out at resistance around 33 or 34 right here. But you can take it all the way back up to this area here at 41 because that's an area of supply resting right there. But the goal of this video here was to discuss where to put your stop loss at, so you do not get caught up in drawdown, right? Don't make this mistake. Either get out when the market comes back against you early enough, or definitely close out if it breaks a certain area, or if you got a hard stop on, then just chalk it up, move on, okay? You may have lost a little bit, but you live to see another trade. So you see where it came back to this area of demand right here, aggressive buying to the upside, demand area comes back, within a tick or two, rejects it, breaking the close of the candle, go long. And it goes, it goes all the way up there. Whoops. Let me delete that. And it goes up there and hit that 41, 42 area, which was that supply area I showed you on the higher base chart. Now, where would I put my stop loss at? Once I get the break and close of the candle right here above, look, I'm going to put my stop loss at the back end of this area where it tapped into the demand zone. Okay, so roughly around 312. Okay, right there. Now, I'm not going to put it tick to tick because sometimes they'll do something like this. They'll push up, they'll pull the market back to come back and test your stop tick to tick, or maybe go through that area there where you may have your stop it right here at 312. They may run it by a tick or two. So give yourself a little breathing room below 312, right here. Okay. And that way, if they do kind of run this area here, because they know people are entering the market at, most likely, and that gives you some breathing room, so they may run through it, okay, and then the market goes higher. They know they want to stop traders out, okay. If it comes back against you and starts doing that, don't get scared. Don't get scared. You're going to have to hold the trade. You're going to have to gain comfortability and confidence in your trades. Yeah, not every trade is going to work out. So if you got stopped out here, guess what? Look what took place here. If you got in here, say at 17, and it stopped you out at 12, what did you lose? 5 points? Okay, that's not a lot. Okay, and maybe you lost 6 or 7 points here. It's not a lot versus taking trades from higher base charts. Then you can start to incur a lot of drawdown. But by cutting the trade early, if it comes back, by getting into a opportunity to where now we move down to a lower time frame, but we're taking emphasis off of a higher base demand zone, and then we're waiting for like the same setup, in a sense, a break of structure, pull back to a key area demand. We are able to get more into a better entry point, more precise, and we're able to narrow down our stop to where we don't incur as much drawdown in case that the market stops us all out. Okay. All right, you may have lost some, but look, you didn't lose nowhere near as much than taking that trade directly off of that higher base chart. You know, if you got into this trade right here and you waited for maybe a break above here at 26, and then let's say the market comes back here, and you were putting your stop at the back end at 303, then you've taken on some major drawdown. You know, if it broke above 27 or 26 and then comes all the way down here to test this area at 303, you're going to have to weather that through. And if it breaks that, then you're taking you lost additional amounts of money. So that's why I like using the strategy and how I do it, marking higher time frame or higher base chart zones, and then getting into a more precise entry point. Not only does it do that for you, but you also are able to narrow down, like I said, and not incur as much drawdown. You're able to narrow down and get more of a I guess a precise or whatever a stop in place. Okay. All right, so that you're not losing as much. So I just want to share that with you because that's one of the things I see people do all the time. And let's say, for example, the market goes in your direction and then it starts to come back and you want to cut the trade. All right, let's say you got into the trade, right here at 17. You cut the trade because it closed one candle and broke below in the opposite direction here at 315. What you lose 2 points worth of profit or whatever the case is, or you lost 2 points of whatever that cost you. So just think about it that way. All right. Taking the trades once they move into a higher base chart but scaling down and looking for, this is that strategy I'm talking about. I talk about this on the channel because this helps people really fine tune their opportunities in areas in which they can trade from. But it also, again, limits the amount of risk and money that they could possibly lose, or by doing this right here, by scaling down, looking for better entry points, okay, and positioning stops at better points of interest as well, so you don't incur as much or lose as much. So hopefully that makes sense to you. All right, it's the number one mistake I see people do. They don't get out when they need to get out, or they're taking trades off of larger or higher base charts. And if you choose to do so, that's fine. That's fine if you got the capital to be able to do so. But a lot of people try to, take trades and they don't have much capital to trade with, and then they blow an account the same day they fund it by taking trades off of a higher base chart. Well, I'm not here to tell anybody what to do. I'm just telling you the way I do it, and it works, okay? And it works for other people that are part of our community too, because they understand how using pair charts works, and getting to a trade off of a lower time on a lower base chart versus taking it straight off the higher base chart. Okay, we're using that pair chart confluence type thing to where, again, we're using a higher base chart, lower time frame chart, and waiting for that beautiful setup to happen to get into a trade. Okay, so hopefully that makes sense to you. Please protect your accounts, protect your capital. You are in this business for one reason, that's to make money and not lose money. Okay, appreciate everyone that tunes in on the daily and watches the videos. Thank you for doing so. Thank you to everyone that's a current sub. But if you're not a current subscriber, don't know what you're waiting on. You're missing a lot of valuable content here, because I give it away for free. I really do. I lay it on the line. I lay it on the table because I want to see people prosper and become profitable more than anything. I mean, it's you're in this business for a reason, and you really want to learn. I know there's going to be always negative people out there that always got something to say about something. Oh, my strategy works better than this. That's fine. Then keep it to yourself. Show someone else how to do it, So that's the reason why I do this. I'm not telling anyone or forcing anyone's hand to trade like me. I'm just sharing how I trade, and hopefully others become inspired. But if you're not a current subscriber, please take the time to sub by clicking on the subscribe button. Also, make sure to turn on all your post notifications so you never miss one of the uploads. And last but not least, please drop a like on the video if you found value in the content. And that's going to wrap it up today, guys. I appreciate everyone. I'll see you in the next video. Take care.